Welcome back everyone. This is a brief update on the oil market. Starting off, US shale oil output is expected to increase by nearly 63,000 barrels per day in February to a record of 8.2 million barrels per day, according to US Energy Information Administration latest update. It was also said that US shale oil production could continue to surge in the next year and even further, but on a slower pace compared to 2018. If the slowdown is confirmed as forecasted, the effect on prices and demand could require a new method to maintain a balance in the oil industry. We saw a dramatic fall in oil prices in the fourth quarter of 2018 coming from shale production, which outworked OPEC's intentions to keep excess supply in check. On other front, news coming from the Middle East and more specifically Iran. A new oil well has been discovered in an area not used before for oil production. The area is located in the southwestern Abadan region, and the oil found was said to be light and sweet. The fact that Iran is still taking action in identifying new sources of oil states that the country is not planning to be out of business in the near future, and quite opposing. Iran has major plans to expand its production and sales, according to President Hassan Rouhani's latest comments. Continuing with Saudi Arabia, Aramco is looking to make its way even deeper in the oil industry, this time making attempts to purchase oil and gas firms in the US. According to Aramco's CEO, who participated in the World Economic Forum in Davos, Switzerland, they are comfortable with spending billions of US dollars as they have plans to become a leading force in the oil and gas industry. Aramco is in talks with major banks like Morgan Stanley and JP Morgan to fulfill its plans on acquisitions, displaying further its financial power. Other important news from Davos were some comments made by Russian officials, precisely stating they would like to avoid any war with the US on oil prices. According to the report, Russia would rather maintain its pact with OPEC to cut production and influence prices to their advantage, attempting to book as much profits as possible. Of course, there is a price to pay for not competing, and so the larger oil cap will continue to belong to the US as they have found cheaper ways to extract oil and see the market from a different perspective. Moreover, comments made from IEA's director, Faith Birol, on Bloomberg, stating he remained optimistic that oil demand would remain high for the coming year, but also confirming the industry faces difficulties from a potential global slowdown and especially China's situation, sparking further interest in the market. China is considered the biggest oil importer worldwide and can affect the oil industry deeply. To close with yesterday, investors of important US oil companies also participating in Davos said they doubt if investment in the industry will persist at the same levels. The profits made from previous activities could be withdrawn by request of payout, without reinvestment for further shale oil operations taking place. Things may not be as smooth as they seem to be for the US shale oil firms after all. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+. This is Angelo Zittis from IronFX, wishing you solid trading.